Let's take a look at the latest numbers from the Belgian capital markets. Over the course of the year, the total investment volume for 2017 is similar to that of 2016. We rated 3.5 billion euros of transactions compared to 3.7 billion euros in 2016. The total volume invested by Belgian investors during 2017 was relatively stable. With 54% of the total volume, offices increased even more and are still dominating the Belgian investment market compared to last year. Compared to 2016, offices increased by 6%, as well as industrial by 10%. Retail decreased by 11% and hotels dropped by 3%. Retirement homes and other remained somewhat stable. Looking at the 2017 investors' profile, they become more international every year. The Belgian investors led the transaction volume with 50.8%. In second, the Asian investors who expanded their activities in Belgium accounted for 20.8%, followed by the US market, which accounted for 7.3%. Furthermore, the Germans accounted for 5.3%, while the French accounted for 4.7%. Canada, Australia, the UK, and several others accounted for 11.1% of the total transaction volume. Interestingly, 46% of those investment transactions were core compared to 80% on average in the last 5 years, meaning those investors are prepared to take on more risks. Let's take a closer look at the largest transactions of the year. The office market has evolved as follows. Firstly, the take-up in Brussels declined by 28,000 square meters. Secondly, in Brussels, the global vacancy rate is at a 15-year low of 8.2% compared to 9.4% in 2016. In addition, the CBD declined by 4.4% compared to 4.8% last year. Thirdly, prime rents in Brussels increased for the first time in 6 years up to 300 euros per square meter. Furthermore, prime office yields are at a record low of 4.50%, which is 25 basis points lower than 2016. Finally, the long-term lease remains stable at 3.75%, which is unprecedentedly low. So, let's guide you through the largest office transactions of the year. In the retail market, prime rents in both Brussels and Antwerp remain stable at 2,000 euros per square meter per year. In addition, prime retail yields are fluctuating. Whereas shopping center yields remain unchanged at 4.25%, unit shop yields, however, hit a new record low at 3.25%. Finally, retail warehousing yields compressed to 5.25%. But the largest retail investment transaction was the sale of the Bromasso portfolio for 80 million euros. Conclusively, for the logistic market, prime logistic rents remain stable at 55 euros, whereas yields compress significantly to 5.75%, and that is an all-time low.